This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. The world's top commodity trading houses are being told by brokers and exchanges to deposit hundreds of millions of dollars in extra funds to cover their exposure to soaring gas prices, 7 sources with direct knowledge of the matter told Reuters. Glencore, Gunvor, Trafigura and Vitol are among the commodity merchants facing what are known as margin calls on their financial positions in natural gas markets, the sources said. The calls are forcing the traders to tie up more capital. Some, particularly smaller firms, are having to increase borrowing, leaving them with less cash to trade with and potentially hurting their profits, the sources said.
OPEC Plus said on Monday it would stick to an existing pact for a gradual increase in oil output, sending crude prices to 3-year highs and adding to inflationary pressures that consuming nations fear will derail an economic recovery from the pandemic. The Organization of the Petroleum Exporting Countries, Russia and allies, known as OPEC Plus, have faced calls for additional supplies from big consumers, such as the United States and India, after oil surged more than 50% this year. OPEC Plus reconfirmed the production adjustment plan that it previously agreed that would see 400,000 barrels per day, BPD, added in November, the group said in a statement issued after online ministerial talks.
Moving on to the top news in the energy sector.
British military personnel in combat fatigues arrived on Monday at a BP storage depot after the government ordered the army to help deliver fuel to tackle an acute shortage of truckers, a Reuters reporter said. Britain's supply chains for everything from pork, petrol and poultry to medicines and milk have been strained to breaking point by shortages of labour in the wake of the Brexit and COVID crises. Panic buying of fuel amid the shortage of truckers triggered chaotic scenes across major cities last week with queues of drivers stacked up. Some have had fistfights over the pumps while others hoarded fuel in old water bottles.
India will introduce flexible fuel vehicles soon as the country is aiming to achieve 20% ethanol blending with gasoline by 2025, Transport Minister Nitin Gadkari told the Reuters Impact Conference on Monday. New Delhi has advanced a goal to achieve 20% ethanol blending with gasoline by 2025, 5 years ahead of its previous target, to help reduce its dependence on costly oil imports. Flexible fuel vehicles, FFVs, can run on any blend of gasoline or ethanol.
Next, we have the top news in metal markets.
Global copper smelting activity rebounded in September as higher treatment charges spurred many smelters to increase output, data from satellite surveillance showed on Monday. Copper processing rose worldwide despite declines in top producer China and in the United States, satellite service Savant and broker Morex said in a statement. Spot treatment and refining charges in top copper consumer China have surged some 45% over the last 3 months and are set for their biggest quarterly gain since the first quarter of 2011.
India's gold imports in September soared 658% from last year's lower base as a correction in local prices to the lowest level in nearly 6 months prompted jewelers to step up purchases for the upcoming festive season, a government source said. Higher imports by the world's second biggest bullion consumer could support benchmark gold prices, which have fallen nearly 15% from an all-time high of $2,072 in August 2020. The surge in imports could increase India's trade deficit and pressure the rupee. We will now look at the top news in the agricultural sector. Canada's smallest canola harvest in 13 years, resulting from severe drought, is forcing importers like Japan and Mexico to pay more or scour other countries for the yellow flowering oilseed. With the scant available Canadian canola fetching high prices, customers of the world's biggest canola exporter are leaning more heavily on smaller producing countries or alternative vegetable oils such as palm and soybean oil, adding to global food inflation. Labor shortages and pests are also eating into those oil supplies. Both export markets and Canadian crushers, who process canola into oil for food or fuel, and meal for animal feed, are coming up far short of normal supplies.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.